All right, let's bring in David Bahnsen, Chief Investment Officer at the Bahnsen Group with more than $7 billion under management. David, good morning. Good to see you.
Good morning. Good to be with you.
All right, so David, everything's going to rip today, it seems like. The markets are just up here in the U.S. across the board. I want to ask you, with a lot of uncertainty ahead, how this mechanism plays out, what happens with the pause in other countries, what sectors, what areas are you having confidence in today?
Well, again, I mean, today you have to sort of absorb the fact that it's going to be a total risk-on rally, with apparently pharmaceuticals being the exception to that. In terms of where we go from here, there will be an enhanced uncertainty around exactly how the details play out. But I don't think today is really a winners and losers situation. It's a rising tide lifting all boats, because it's about risk premium. You have a significant amount of additional risk premium that had been priced in that now gets to be relaxed for a bit. Similar to the post-April 2nd announcement 4 or 5 days later, it wasn't just that now everything's resolved, because it wasn't. It was the sign, though, that clearly the president's not going to go through with all of the worst case outcomes.
One area that the Treasury Secretary said they actually didn't talk about with their Chinese counterparts was currency. But I'm looking at the dollar. It's up pretty big this morning after falling pretty significantly after the trade deal, or the tariffs were announced back on April the 2nd. How do you view the potential for a rising dollar, what that means for this markets? And a lot of these companies, S&P companies, a lot of them do their business overseas.
Well, I think that this currency aspect is going to have to end up being a big part of the China deal in particular. You mentioned that the dollar had dropped quite a bit post-April 2nd, but it was only down 1.5% to the Chinese yuan in that 6 weeks, and it was up over the last year. It was actually up about 25 basis points relative to Chinese dollar. You had mostly seen in other emerging market currencies, particularly Taiwan was a big move, and other South American currencies. Secretary Bessent wants a weaker dollar relative to the Chinese yuan, and that's going to end up being a part of this negotiation. It didn't come up over the weekend. I understand why the dollar be up this morning in light of the news from a macroeconomic and foreign exchange standpoint. But a weaker dollar has got to be part of where this goes, because the secretary has talked about that for quite some time, even well before April 2nd.
You gave us some stocks that you like. I don't know if these stocks were before we actually knew there was a trade deal, and if you still feel the same way about them. But one of the stocks I want to talk to you about is IBM. So obviously tech's, catching a bid this morning. We're seeing the NASDAQ up 3.5%. You said you liked it because they've been growing the dividend. But there's another side of the coin when it comes to IBM. They're a big government contractor. I want to go back to Bessent's comments. He talked about cutting the federal budget. One area that they've certainly been cutting on is tech, cybersecurity, things like that. We're going to talk about cybersecurity later today. Are you worried about the risk when it comes to an IBM that some of their government contracts might get cut? They actually signed a big deal with GSA last year for about $900 million. Worried that as part of this DOGE effort, contracts like that might get cut. Their consulting contracts might get cut as well?
No, not even a little bit. Those contracts are a rounding error in the grand scheme of IBM's hybrid cloud software growth. Their AI book of business is entirely separate from government contracts. To answer your first question about whether or not the stock picks would have been before or after the trade deal, they were certainly sent before the trade deal, which obviously kind of came in the middle of the night. But by the way, the whole point of dividend growth investing is it should never be conditioned on headlines. These are meant to be companies that you believe have the perpetual ability to grow free cash flow, and then from the free cash flow, grow the dividend they're paying to us. IBM's a perfect example of that. The government contracts are likely going to go higher for IBM, not lower. But no, this is a company that the main cash flow thesis is totally separated from government work.
David Bahnsen, great to see you as always. Thank you very much.
Thanks so much.